Well, hi, everyone. Welcome back to the What Kind of Internet Do You Want Web3 Weekly Wrap-Up. Good to be with you this Friday afternoon. I'm Amy James.
And I'm Devon James. We finally have our live stream going out live when we said it was going to. Stoked about that. And one thing we added, just because we noticed that someone was asking some questions during the live stream last week, we have actually added our live chat so we can see it now. We weren't able to see that last week. Sorry about that. So now we can, in case anyone that's watching has some feedback or some questions or anything like that, you're welcome to ask them. And before the end of the show, we will make sure to take a look at them and get back to you. So awesome. This is a very, very exciting new experience.
Yeah. Yes. I love being live. It's like harkens back to theater for me.
Fair.
Live is just so much more fun.
Fair.
All right, let's dive into the Web3 weekly news.
Yes.
What do you got for us?
All right. Well, first up, a gentleman called NFT God who promises he's cool despite the name, and I was going to judge him otherwise, responded to Elon's request for if there's anything that should be changed about X. And I'm sure there's a lot of things that people want to be changed about X. That's just, that's the nature of the beast. But in this case, he basically went through all 13,000 lines of code and gave him a fantastic thread going through a whole bunch of suggestions. And at the core of them all is the concept of you can go through the whole thread. We'll actually link the URL for that in the show notes at the end. But basically, the core of them all is transparency will make people be better users of the platform. Things like, for example, why exactly a post was prioritized or deprioritized comes down to when they say the algorithm, it's a whole bunch of different pieces of metadata about an account or about a piece of content or something else, and then some sort of a ranking score, whether it lifts you up or pulls you down or anything like that. And so all those scores are within the code, but exactly why, like what is in particular lists and stuff like that, that's not disclosed. What kind of subjects are considered controversial and which would get you downranked. As he points out, users have pretty much figured out certain things that will get you downranked, but not everything. And so transparency would really benefit. So just a lot of really fantastic feedback, like kind of the concept of show within someone's profile all this metadata that actually leads toward whether they're getting upranked or downranked or anything like that. And because people want to do well on social media, they're likely to kind of take that into account as they do things. And also the transparency would mean you couldn't do something you couldn't have within your code downranking based on overt partisan division or anything like that, because it would be embarrassing to the company to have to admit that. And then what was really fun about all this, I mean, obviously someone spends an enormous amount of time reading all of the code and then giving all this feedback. They really hope that it can actually get somewhere. In this case, Elon actually responded. He said, I mostly agree with your recommendations. Much is already in flight. Let's circle back in a month and see what's still missing. And NFT God said, that this is basically the greatest day of his life when that happened. So,
the pinnacle of his tweeting career.
Yes. So very, very exciting. That was pretty awesome. Yeah.
Okay, so what stuck out to me about this story is how for, I don't even know, years now, people have been speculating about why they have been shadow banned, why they have been downranked, which words, which phrases. People will spell things in weird ways. They'll say, they'll bleep themselves. They'll say, I'm talking about the bleepity bleep, right? And just...
Well, I think one of the most common ones was literally, I think especially on YouTube, maybe not as much on Twitter, was just talking about the pandemic at all. If you talk about it at all, you're going to get downranked, downvoted, all these other, everything. But it was never transparent that was the case.
And so what was so great about NFT God finding this list of what you would get downranked for is that, yes, some of the things people have speculated were in that list, but other things that we knew nothing about were also in that list. And so it's just that transparency issue that you're talking about, because if there are certain things that you can do or shouldn't do in order to elevate your reach, people are going to do that, right?
Exactly. And what's really fun about this is we've literally been talking about that idea for a really long time. You've had on your profile, I think I do too actually, a sun logo. because with our work with Open Index Protocol, we kind of adopted that as our little icon because of the belief that sunlight is the best disinfectant. And what we mean by that is explicitly that it will improve people's behavior if they understand, if there's transparency about things. And so one of the best things that social media companies isn't just don't do any ranking, don't do any kind of, keeping track of any information, but make that metadata transparent. Make it, maybe not right on someone's profile, that might be overwhelming, obviously, that could just, bog down with a lot of information. But you should be able to kind of right click into it and kind of dig deeper down and see what's causing this down ranking, why is my score what it is, what's adding up to that, because it's kind of like what we have with credit scores. Like, you have your credit score that's just the one line kind of number that tells you what you're doing. But when you get your credit report, it gives you all the details. It's because of this, this is lifting you up. And the result of that is that people that subscribe to those kind of things are able to improve their credit score, because if they understand how they're being graded, they can improve how they're performing.
Well, it's just part of that idea of fairness for creators, in my opinion, right? It's like I talk about how we're kind of sharecropping on these platforms right now, and we're working inside of an opaque rule set. And this is a step in the right direction. Hopefully, we'll see. We'll check back in a month and see how it goes. But actually, on that note of people being deranked, demonetized for anything talking about the pandemic. And also, sunlight is the best disinfectant. Actually, I'm going to link those two, because when we first talked with Eric Weinstein, he said sunlight, that he hates that saying because sunlight can make some infections much worse. So there's that little factoid for you.
What a literalist.
But we met Eric through, of course, his brother, Brett, who we have been friends with for a long time now. And he recently had us on his podcast this week. The episode went live. It's the Dark Horse podcast. It's now surpassed 30,000 views. So it's great to see Web3 going mainstream. Brett is obviously well known for being deranked and very aggressively demonetized for his reporting about things around the pandemic. But if you want to check it out, you can find it on YouTube and on Rumble. On YouTube, it's Brett Weinstein. On Rumble, you have to search for Dark Horse Podcast, and Dark Horse has to be one word. If it autocorrects to 2 words, Rumble can't find it. Which
feedback for Rumble. You might want to upgrade how your search works. You need a little bit more variability.
That's a little bit startling.
Yeah.
So, yes.
Yeah, that was
Check out
awesome.
the podcast. It's a great conversation. We get into all kinds of things about Web3. And we'd love to hear your thoughts about it as well. So, speaking of Web3 going mainstream, the New York Times has potentially finally capitulated that Bitcoin is here to stay. This tweet is, of course, the one that alerted all of us to this. Very funny. Do I smell capitulation? The actual article is pretty interesting, and I will just read a couple of quotes here that I thought were particularly important. Even as the price of Bitcoin fell precipitously in 2022, the overall percentage of people in the United States owning crypto grew to 11% from 3% in just a year.
That's stunning.
Right? Oh, so exciting. It's at 12% this year, according to the National Bureau of Economic Research. And I guess I just want to go to say that the article goes on to talk about the kinds of people that are investing, or I take issue with the word investing, and they actually break that down in this article too, because an investment typically pays some sort of dividend. You have some sort of say over what's happening, right? None of those things happen in Bitcoin. It's more of a store of value in that way, right? It's just like something where you
converting.
Yes, much better, yes. So the kinds of people that are converting their funds from fiat to Bitcoin are young and predominantly male. The percentages here are 41% of men ages 18 to 29 reported having owned or used cryptocurrency, and just 16% of women in that same age range had reported owning or using cryptocurrency. So that's 41% men, 16% women. These numbers don't surprise me one bit. And that's because as the Nordic countries have shown us, right, men and women have differences in interests. The more equal opportunity places become, the more the sexes diverge based on those interests. Women are more interested in people, men are more interested in things.
Quite true.
Bitcoin sits right at the intersection of tech and finance, which is the thing, fully in the things category. And so often when you go and look at a crypto project, you'll see that the woman on the team is in the marketing department because that involves talking to other people. And I also think that there's just like part of us, just to kind of get into that, you know, the gender conversation that's roaring on Twitter these days, having just had a baby, that there is, that we each have these sort of innate aspects of ourselves because of our gender, and that men sort of innately understand that they are going to need to provision for their family for a period of time when their partner is unable to. And that means, you know, looking for opportunity, and opportunity means taking on some risk. Men are, in general, more comfortable with taking on risk, which I would say you and I can attest to in our own personal experience.
We certainly can. Yes. And women are much less likely to be open to
Not
risk.
me. Never. Oh. Anyway, I think that trying to make this something that is, you know, sure, there is definitely a toxic crypto bro culture, but there is absolutely space for women who are genuinely interested in this. And that also means, though, not forcing women into something that they're not genuinely interested in, which is something that I have sort of felt in most recent years. Like, it used to be that I was either the only woman in the room, you know, 10 years ago, or one of very few. Now there are more, and that's wonderful to see. But I also sometimes feel like before it was just clear to everyone that I was there because I was interested and had something to contribute. And now sometimes I feel nervous that it has something that I'm being lifted up because of my gender. And I really don't like that. I really, really, really like being earning it and having it be because of merit. And that is, so, you know, that's just something that I think needs to be said when people are criticizing, like, who owns crypto, who's involved in crypto, because the other thing that I wanted to mention really quickly is that there is a reason that it's the people that are, you know, under 30 that are predominantly interested in this. And that's because it's a chance to, how do I articulate what it's a chance to? It's a chance to have the kind of prosperity that was afforded to other generations that we are lacking as well. I'm a millennial.
Yeah, you're right on the edge. I'm Gen X, she's a millennial. Just who knows where that line really is,
And this tweet went viral a while ago that just the numbers make this crystal clear, right? Millennials hold 4.8% of all wealth. At the same, and there are now 40-year-old millennials. At the same age, Gen X had 9% of wealth, and boomers had 21%. That really, it's not in our heads, guys. It's not the avocado toast that's making us not be able to buy houses, right? And there's, if you scroll down a little bit, there's a tweet where somebody says, "I'm curious what happens to these numbers when you remove the billionaires from each generation." And he ran the numbers and said Mark Zuckerberg single-handedly has 2% of millennial wealth. So the numbers get even worse.
Wow.
Yeah. So that's why Bitcoin is hope for a lot of us to be able to, you know, buy houses, maybe even retire. Wouldn't that be crazy?
Kidding, wouldn't it? Yeah.
Yeah.
Goodness. Wow. Okay, well, you know, in order for that to happen, we need some adoption. So let's talk about some potential adoption. We've got some mainstream players getting involved in the space here. Farmville creator Zynga. Zynga also created, Words with Friends. So both of these were just hugely popular in the past decade or so. They announced many years ago that they were going to do this, and they finally actually have teased the game itself. It's called Sugartown, and it's going to use Ethereum NFTs. Basically, there's these little farm animals that have opened up a wormhole from another dimension, and creatures called auras, which of course is the name of their NFT, have crossed through the wormhole and turned Sugartown into a fun, gamified world. They haven't yet said when it's going to actually come out, but to get ready for it, they will release 10,000 Aura NFTs later this year, and that will be actually required for users to play the game. Honestly, I think that's really smart to start with a really small number, especially, you'd have to assume that a big company like that might have some voices in their ear saying, oh my God, you're going to have 1 billion players, in no time, it'll be amazing. But given the hurdles to kind of, for non-crypto folks to get into a crypto project, needing to get a wallet, have an understanding of what that actually means in the first place, etc. Really smart to start nice and small. Players will also be able to lock up or stake their NFTs to accumulate sugar, a non-crypto in-game currency. This is actually a really smart move too, in my opinion. A lot of games have in-game currencies. And I've said for a long time it would be really great just because whether they're tradable outside or not, actually using a blockchain-based token for that in-game currency is just a really smart idea. Why do it with your own separate, monetary mechanics when you can use something that already exists? Lower your cost for how you kind of store the ledger and how you kind of transfer them between people, etc. That'd be great. There's this fun little teaser video that you can check out if you want. And the one last thing I thought was really interesting about this particular article is Zynga actually was acquired last year. I didn't even realize this. They were acquired by the publisher of Grand Theft Auto. And they announced at the time that they signaled. I don't know what the article actually means by signaled. They might have announced, or it might have just been the fact that Zynga had already said they're going to get into this space, and then Take-Two Interactive bought them for nearly $13 billion. Obviously, the gaming industry, if you don't know this already, of all the entertainment industries, music, movies, television, and games is the largest segment. It's kind of stunning. So this incredibly valuable thing was purchased by Take-Two Interactive, and so it seems like they might get into the cryptocurrency Web3 kind of NFT token-based kind of industry soon. Honestly, that'd be really cool. I'm a fan of Grand Theft Auto. I played it, since the very, very kind of first version. It's a fun game because it's like this open world kind of simulation kind of thing, and you have money within the game. It'd be really cool if that was actually an asset that was actually held on one of these decentralized ledgers, so that it had real world value, so that if you play really, really well and earn an enormous amount of it, you can actually sell the proceeds of that to other players because having the money means you can do certain things within the game and stuff like that. So just really cool and a nice little sign of adoption. Always fun.
Yeah, for sure.
You're not much of a gamer anymore.
I really have nothing to add at this point in the conversation, but I'm excited to see something so high profile integrating some Web3 stuff. So that's cool.
Exactly.
And our final bit of just general Web3 industry news is that MetaMask has rolled out one-click crypto buys with Apple Pay. And I love this because I love one-click buying.
Yeah, no kidding.
Just a quick quote here. For this integration, it's going to work for returning users. These are users that have already signed in and made an account with Banxa,
I'm guessing, yeah.
And have already completed KYC. It's not getting rid of those steps entirely. It's more about reducing friction on those second, third, and fourth purchases so that they can go to that final step without having to redo anything else. And so, I don't really think that there's much more to add to this story. One click, it's kind of like, okay, well, when I'm maybe my one-click shopping sprees on Amazon can transfer over to just buying crypto instead. More useful impulse purchasing.
The one thing I would add is, since they're using the payment provider Apple Pay, very cool. It certainly makes it easy. I love the Apple Pay kind of interface that, like, even if you're on the computer and you want to check out and it pops it up on your phone to get the authentication. I wonder though, since Apple has been so antagonistic toward the Web3 industry if they will take issue with that, and if they will, in fact, block it or prevent that from happening in the future. It'll be curious. So
That's a really good point. We'll have to keep our eye on that, right? Yeah. Because right now, all you're going to have to do is have the Apple Pay interface come up, Face ID, boom, funds and wallet. Like that's awesome.
Yep. Okay, and so to the kind of Web3 DePIN ecosystem, a few little news points worth mentioning. The Graph protocol has now surpassed 1 trillion queries since launch. That is huge. And I don't think I kept the tweet handy, but I saw something earlier that I think Google gets a little over 3 trillion per year. So
no way.
Obviously, the Graph has been around for a handful of years now, so they don't compare that directly. And I'll be honest, queries on the Graph is not it's not a user asking for a search.
Right.
It's kind of an API hit kind of thing. So clicking a button on an interface within an application could trigger 3 or 4 queries. So it's not exactly a one-to-one equivalence here, but it's close enough to one that's kind of stunning.
It's a huge number. Yeah,
stunning.
It's amazing.
Yeah. So congratulations to them. That's
done, guys.
Fantastic. Great work. Next, we've got Helium. Helium has definitely gotten some hate in this industry. I think actually, I could be wrong about this. If anyone knows otherwise, where the source of that hate comes from, my understanding of it was that there was a kind of a mainstream journalist that was using it for a while and was reporting for a while about how great it was because she, if I remember correctly, was using it and earning a fair amount of income from it. And then after a little while, she kind of audited how much use it was getting and discovered that it had gotten a very small percentage of use compared to the amount of reward that she got. And she suddenly decided this is a scam, this is bad, this is no good for anyone.
Oh, wow. It sounds like she really misunderstood things.
Yeah, exactly. Because that's the exact same thing. That's Bitcoin is the exact same way. Like if someone earns $1,000 from mining Bitcoin, probably only $1 or less of that is transaction fees on the network itself. The rest of it is the amount that was put up by the creator of it in order to subsidize the use, because we've got a chicken and egg market problem here where you need demand side and you also need supply side, and you need to solve one of those things before the other. If you try to build them both at the same time, it's going to build incredibly slow. It's not going to be a very good experience, etc. Why would anyone mine if they're only earning the transaction fees? So same kind of thing in that particular case. But if I'm wrong about that, if that's not the only reason that it's gotten so much kind of hate, anyone that wants to correct me on that, please let me know. But I think this is really big news. So Helium itself, this is not Helium itself. This is something built on top of the Helium network. Helium Mobile has debuted a crypto wireless network in Miami for $5 a month. So you can get mobile service, data, text, and phone service in Miami only right now.
That's
for $5 a month. It really is a fantastic price. They actually originally announced it was going to be $25, and so no one knows what happened to that. It was probably just like everyone knows it needs to be dramatically better than what the comparison is.
Right,
and so doing it for $5 is absolutely huge. But it also just might demonstrate look at how much better your pricing can be when you fully decentralize things and you take all the infrastructure of a giant company out. Now, in this case, there is a giant company involved, and this was also a really smart move. T-Mobile is also a part of it, but only as a backup. If someone is using service and they're in a vicinity, so if anyone that doesn't actually understand, the way that Helium works is that end users put a little cell tower on top of their house or something like that, and it shares their internet service or their 5G service with anyone that's in their immediate vicinity. And then it's actually designed in such a way so that they're earning income, part of that token reward system, and it's proportional based on how much of a coverage gap they're filling. So if you're just overlapping with a whole bunch of people in your immediate area, you're not going to get as much of a reward. If you're filling a gap that was otherwise uncovered, you're going to earn a little bit more. So really smart approach to how to do a decentralized kind of mobile network. But where gaps still exist, users of this mobile service will fall back to T-Mobile's nationwide 5G and 4G network.
That's super smart.
Kind
I
of
love
fantastic.
It.
Yeah, absolutely brilliant. Absolutely love it. I actually hadn't really realized this, but that Helium itself leans a little bit more like they try to say that they're a lot more of a IoT network, and that actually makes sense as I was kind of reading about what was actually using it. Like someone was talking about how their garden grew especially well this year, and it was because they have a soil monitor that is on an IoT network that is broadcast over the kind of Helium network. So smart move, especially as we're gonna put mobile ability into more and more devices and put them all over the place, for that to be able to tie into a really inexpensive kind of people-run mobile network rather than just putting it on top of AT&T and everything else and increasing the burden on top of these companies. Are going to use it as an excuse to charge you more. Really smart move to do it this way instead. So I'm quite a bit of a fan of Helium so far. So we'll kind of have to see how it goes from here. If this is really successful and it rolls out to other cities, that'd be awesome. I would love to sign up for something like that.
Yeah, for sure. If anybody out there is in Miami and gets to try it out, definitely tweet at us and let us know how it works.
Yep.
All right. Well, our last bit of deep in news is for Livepeer. And this story is very cool because it is combining social media and live streaming, a social media platform that kind of goes way back to the early days of the crypto industry. If any of you out there remember Minds, God, what year was that? It was like 2016 that they were coming together, probably maybe even earlier.
I think they were actually have been being built for longer than that, like fairly longer than that. But yeah, that's when it really became kind of top of mind for a lot of people. Yeah.
Okay. Well, anyway, Minds is, I believe, open source and decentralized, and now they have integrated this Livepeer protocol to do their live streaming. From their blog post about it, they said, "We've heard your requests for live streaming and wanted to build it, but making it a reality that won't sink Minds financially is a big, difficult task." Thankfully, our friends at Livepeer stepped up big. Through the power of open source collaboration, the Livepeer team added a new button to the composer that enables anyone to live stream right here on Minds starting today. Consider this a beta. So awesome. What I wanted to highlight in this story is that part where they say that it won't sink Minds financially. This is a big, difficult task. Creators already know that on a lot of platforms, you have to have hit certain follower numbers or views or some sort of metric in order to even have the live streaming feature be unlocked for you, because the amount of cost associated with the infrastructure to run live streaming is high. It's just, it's a barrier, and it's a burden to the revenues of the company, of the platforms that are providing those services. And so they've had to kind of put, limit access to it. So what's so cool about this story is that by using decentralization, by having things be open source, they're able to make it available to everyone, and they're able to do it as a much smaller company in the social media space, and yet not put any of those barriers, not limit that access. It's just very cool to see. So in that same blog post, it says, what are the benefits of live streaming on Minds? Number one, monetization. Your channel is already eligible to earn a share of our ad revenue based on the impressions served on your channel. Our affiliate program gives you 45% of all ad and membership sales you drive. That's a lot. That's much more than is offered by some platforms, I believe.
That's fantastic.
The other one is reach, and this one is super exciting for content creators who are looking to build their followings. I kind of thought maybe we should be looking at live streaming here as well, because they are going to feature you if you live stream, obviously, to help promote the new feature, to help promote your content, and you will be able to earn tokens. So, and you can use those tokens to boost your posts. So it's like double reach there, kind of. And the last kind of thing that I'm just going to mention here, because it's relevant to us, is that the way that the integration happened allows you to use it with things like OBS and StreamYard. We use OBS to broadcast the show. So it's like very cool that you can do, I forget what they call it here, but it's like you can you can, stream to multiple platforms at once. So Minds, you're not having to choose specifically that you'd have to stream to Minds. You could be using OBS to stream to Minds and YouTube and Twitter, hopefully.
Eventually Twitter.
Yeah, exactly. So bravo,
Awesome.
guys.
Yes.
So excited to see it.
Yes.
Can't wait to see, how this gets used.
Excellent. Well, so how is the market reacting to the news of the week? We are a little over 26,000. That's great. So we've got a story here. Bitcoin Magazine broke this story yesterday. Elon Musk's SpaceX sold all of its 373 million Bitcoin, according to the Wall Street Journal. But according to readers, this is why I really love community notes.
Yeah.
That's kind of BS. All they were really reporting, the Wall Street Journal was reporting, was that they wrote down the value of the Bitcoin that they owned, and they may have sold, but it was at the time. So it wasn't breaking news that they sold. In fact, there's a lot of debate about exactly what has caused. It's been a gnarly bloodbath. If anyone hasn't been watching the numbers, we'll look at the whole market in a second. But it's not entirely clear what caused it. It may have been that news. It may have been some other kind of small little pieces here and there. A lot of traders just think it was what do they call it? A long squeeze, where people basically had taken bets on it staying high for a long time out, and all it needed to do was dip to like 28.5 for some of those to get triggered. If it gets triggered, then those particular holders needed to sell in order to cover, and that'll cause it to kind of keep on falling. So it actually hit as low as 25K late last night. I saw some kind of hilarious memes about this, that some people are looking at it as like, oh my God, this is the worst thing ever, and plenty of others are like,
BTFD.
this is absolutely wonderful news.
Yay.
Like, opportunity for buying. So anyway, let's see how the rest of the market has handled, really specifically the deep end market. If you're unfamiliar with our little interface here, across the bottom, the little stream across the bottom, that's the top 10 tokens by market cap, and then beneath that, the top 10 tokens by trade, by volume. And then we've got Bitcoin and Ethereum in between us. Here, Bitcoin is down, touching at 26. Like I said, it did hit as low as 25. But then the deep end market is what we're looking at in the middle, and that really is very much a sea of red. Filecoin and the graph down 15%, Theta down 15%, Render down 15%, Arweave down almost 12%.
But I mean,
Whole
as
bunch of
usual,
gnarly there,
right?
but
They're just
then-
kind of following the...
For the most part. I mean, they're not really following. Bitcoin dipped about 10% total, and so these are more than that. But that also happens because some people, because of that dip and that it's, BTFD, some people then sold their alts to buy to get more Bitcoin because it's at a lower price. And so that pushed the price of some of those alts down. At the same time, where did LPT... LPT was also up a second ago, but it just updated. But cash is still absolutely charging. Anyone that was watching last week, they were up nearly 70% when we broadcast, and I think over 100% by the end of the week. And now, again, this is the weekly performance. So then, despite this insanity with Bitcoin and Ethereum and the entire rest of the market, Cash and Polkadot, or is that Pocket? Sorry, not Polkadot. Pocket are both up kind of enormously. Pocket up 13%, a Cash up a third, 34%. So wowzers, sorry, that's actually on some pretty fantastic news that they've done their final tests, and GPU rentals on their mainnet is going to be happening kind of any moment now. I might have actually missed an announcement this morning. We'll have to take a look at that. But fabulous.
Yeah,
on
we're
that
super
front.
excited for you guys at Cash.
Sad for all the red, but it'll come back. We were just talking to someone yesterday about kind of where we are in the cycle. I agreed with him that he kind of suggested we might be in the spring, coming into the better days, sunnier days. So we shall see.
We'll see.
Yeah. Okay. Well, on the regulatory policy type front here, we've got a weird one. So I'll just skip right to the kind of the second one. This kind of frames it well. Coinbase, tarred as an illicit exchange by the SEC, quietly got regulated elsewhere in the U.S. So basically, they just got approved to list crypto futures. So the ability for people to be able to take a bet on how it's going to do in the future. They have just been approved for the ability to do that. And this is interesting because it basically it reveals the kind of discordance between the SEC and the CFTC, partially just because the SEC is basically accusing Coinbase of being a bad actor, of not following the law, et cetera. And in order for them to have been approved for this futures, they have to be a good actor. It's not just that their application is in order and everything like that, but the platform itself has to be doing a lot of other things in the right way. Here's a little quote that kind of illustrates that. "You see the branching paths that the CFTC has taken versus the SEC," said Justin Slaughter. Anyone that was watching the hearings earlier this year heard him talk. He has some significance because he's worked at both agencies, and now he has kind of a market perspective because he's policy director at Paradigm, which has an investment stake in Coinbase. And then he goes on to say the CFTC focused on getting a major crypto player registered, while the SEC is going to court to sue everybody. Yeah, this is a setback for the SEC, said Brent Zhu, CEO and co-founder of Yumi. The CFTC has essentially said that Coinbase is a fully legitimate actor in the United States at a time when the SEC is saying that the exchange is not. And the SEC has, the article kind of points out, the SEC has in fact approved one special purpose broker-dealer for digital assets, a company called Prometheum Inc., that no one had heard of before he went up there to kind of say that they'd been approved and the whole situation is perfectly fine. They're quite obscure. But because they haven't actually done any real trading of digital assets yet, who knows, how legit that is. That was definitely called into question by a lot of people, and kind of were they trading their approval for positive testimony to Congress. I don't know. We'll see. But this also just kind of highlights that the rest of the world is definitely kind of taking point. Europe's first spot ETF, which was approved 2 years ago, I think, has finally listed in Amsterdam, and so that'll actually start trading very, very soon. And the Monetary Authority of Singapore has finalized its stablecoin regulations. So basically, it just kind of gets into that there needs to be a few minimum requirements in order for you to be okay as running a stablecoin. You need to maintain adequate reserve assets. You need to be able to return the par value of stablecoins to holders within 5 business days, and they have to comply with certain disclosure rules. Basically, they back their stablecoins almost entirely with cash, some currency equivalents, short-term treasuries, etc. The article goes on to say that the U.S. Senate has approved a bill that will make stablecoins subject to anti-money laundering laws. That's actually a misunderstanding. It wasn't the Senate in the first place. It was the House, and they haven't actually approved it. It just made it out of committee, so it's been actually introduced. It's really significant legislation, though. It's called the Clarity for Payment Stablecoins Act of 2023, sponsored by Chair Patrick McHenry, who... Anyone that's been kind of following the space knows that he's the guy that said 5 years ago or so that Bitcoin can't be stopped, and everyone that's tried has failed. So, and we've met with his office a handful of times. They really, really do understand this stuff really well, and they're big supporters of it. It enables freedom. It enables kind of stronger markets in the U.S., better protections for users than what just regulations can provide, et cetera. So someone like that taking point on these kind of things is fantastic, and from our read of the bill so far, it's a great way to move this forward in the U.S. So we're quite stoked about that.
We all need stablecoins. Every part of the crypto industry. It's not just about having stablecoins. It's about having something that you can use to interact with DePIN protocols, as an example, right?
Yep.
All right, moving on to some updates going on in the courts. We've got 2 for you this week. The first is that Tornado Cash lost a lawsuit recently. They were backed by Coinbase in order to have this, to defend themselves in this lawsuit. And the judge found that Tornado Cash is an actual entity itself, which has a property interest in its smart contracts. I'm going to read a quote here. The DAO is an entity unto itself that through its voting members has demonstrated an agreement to a common purpose. As the government notes, the structure is not unlike that of stockholders of a corporation who may not intend to vote in a shareholder meeting without this affecting the structure of the entity. And he rejected other arguments from the plaintiffs, including one which said that Tornado Cash doesn't have a property right in the actual smart contracts being designated, and another one that said that the sanctions violated the First Amendment. Coin Center has also filed a lawsuit in this case about Tornado Cash about a month after Coinbase backed the suit, and the Coinbase chief legal officer said that the company would be supporting an appeal. I think that for all of us in crypto, the relevancy about this case is about the findings around the DAO. And I've wondered how DAOs would be treated. It's one of those issues we say often that, new technology sometimes needs new rules. And I think that that's kind of what this is highlighting, because how should a DAO be treated? It's very unclear to me how a DAO should be treated. There are people on the crypto side that argue that the DAO it's a decentralized autonomous organization. There isn't an entity. There isn't a person. There isn't, a single thing that should even be able to be sued, I guess they would say. But in order to kind of fit into society, there has to be something.
Exactly.
And how do they comply with things like tax law if there is no entity? How do they file an entity with the government if there is no entity? I don't know. It's one of those things.
I disagree with that particular take. I think the judge was right about this, because I think they're wrong to say it isn't an entity. It's within the name. It's an organization. It's a decentralized autonomous organization. And I would say the core argument has been we need to recognize that it is decentralized and autonomous, but we don't need to ignore that it's an organization. It still has responsibilities as an organization that interacts with other ones and stuff like that, like tax law, et cetera. And I think the missteps in the past have been assuming that there needs to be some human being registered, on paperwork or whatever, because that misunderstands the decentralized autonomous nature of it. It should be represented by its voting members the way that the judge is actually representing it here. And I like that.
I have a question about the word autonomous then. What does it mean in this context to you?
It is autonomous from other items, and it makes its own decisions for itself.
Okay. All right. I can accept that. So I would
say seeing that as a legal entity that should represent itself in court and in other ways through the holding of voting tokens and the votes by those holdings, I think that's exactly the way it should be interpreted. And I think that would be it'd be fantastic if this was more kind of widely recognized and represented in other ways. Yeah.
I mean, I appreciate that we're getting some sort of clarity around this, I suppose. And I can't say that that Coinbase is supporting the lawsuit, that Coin Center is also, has put one forward. To me, I would love to hear their arguments. I'm sure that they have really compelling, really great arguments, but I don't totally understand why DAOs shouldn't have to, comply with the kind of same kinds of things that companies do.
I hope that I'm right about this, that's not the grounds that they're trying to argue it on, because the article did mention that some of the grounds they were arguing it on were First Amendment grounds, that it's been recognized in the U.S. for a long time that code is speech. And
money too, right? The Citizens United case.
Exactly. Yeah. So if it's either code or it's money, it's still recognized as speech, and speech is, you can't regulate speech within the United States. A lot of people say you can't yell fire in a crowded theater. That's actually a misunderstanding. You can. And it was actually, I think it was the Supreme Court that actually adjudicated that and decided that. So that's a misnomer. And so, there might be some exceptions. You can't threaten someone because that's violence. But we generally have a broadly respected recognition of the right to freedom of speech. And when someone writes code, that is a part of that freedom of speech. How it gets executed, and if the execution of it breaks some particular laws, then the person that's doing that execution is liable for those particular laws.
100%.
The code itself
totally
is
agree.
not. And so
Yeah.
a DAO and the person who wrote the DAO and wrote the code that runs on it should not be liable for those things. And in fact, I'm remembering now that there was some stories where they actually did reverse themselves on some of those elements, and I don't remember the details of them, so I can't really bring them up right now. But I would assume that any good lawsuit about this is going to be based on First Amendment grounds, trying to just argue you can't do these things because it's protected free speech. There might be other things you can do, but you certainly can't sanction code.
Yeah. Okay.
We'll see.
That makes sense. Well,
We'll
yeah.
see. Yeah.
Keep an eye on it.
Yeah.
And closing out the show, a bit of, shall we say, good news?
This was actually announced last Friday, if I remember.
It was right after the end,
of,
but I don't think that he actually. So the news is that Sam Bankman-Fried has been jailed ahead of trial, and this was announced last week after our show. But I don't think he actually went to jail until sometime this week.
Yeah, just yesterday or so, I think.
Yeah. And the quote from the judge, I think, it just articulates it so perfectly. What he said is that Sam Bankman-Fried is, quote, willing to risk crossing the line in an effort to get right up to the line wherever it is. Mm-hmm. And that sounds, from everything that I've heard about him, I certainly don't know him personally, have never met him, have never interacted with him, never used FTX. But from everything that I've read about this case, that sounds like the exact right way to sum up his personality, his behavior, risk assessment, his, right. Like he's just like, I mean, can I get by on a technicality here?
Yeah, he definitely seems like someone that is so certain of his own intelligence that he can get around everything just because he's so smart that he can do so. He's smarter than the judge. He's smarter than the law enforcement, et cetera, et cetera, et cetera. And it's like, it's so overtly not true when it's not true.
And so the examples of the things that he did that caused him to be able, so he was on house arrest at his parents' home, living what seemed to me a very posh life. And now will be going to jail. And the things that he did when he was at his parents' house were he reached out to the former FTX general counsel. He used a VPN to, in the words of his defense team, watch the Super Bowl. Mm-hmm. Who knows what else he
Very
did,
likely,
right?
I'm sure he's a big sports fan.
And he did something else too. Oh, the thing I think that set all of this in motion is that he leaked some of Caroline Ellison's private diary entries to the New York Times.
Wow. And
I read the article from the Times about this as well, and it seems really clear, especially from her behavior and his behavior, and honestly the diary entries themselves, that she was pretty uncomfortable with what they were doing and very conflicted, and has gone on to say things like she knew what they were doing was wrong and apologize and take responsibility for it. And he, continues to essentially flout the law.
Yeah.
So he's in jail. The trial is pending. I think it's going to begin in October, if my memory is right on that. So, we'll obviously stay on top of this story.
Case study in what a psychopath is, because like a lot of people that don't really understand what it means. It means someone that doesn't have empathy, the empathy that most people have. So she felt bad. She was still kind of coerced. She's young, she was kind of guilt tripped into it, or just was making a bunch of money, and so she justified it to herself. But she still had that pang, that inkling of this is wrong. That's having empathy. She knew other people were going to get hurt by it. The fact that he still shows zero evidence of that suggests he could be a psychopath.
He is like way too calm, cool, and collected under.
Like he did his whole thread about I totally fucked up and everything, but it's just what his rationality told him was the best way to handle this. I've still not seen any actual evidence that he feels bad that he hurt people, that he emptied people's savings.
I mean, the other thing to note there too is in that New York Times article, they revealed the amounts that each of the kind of top executives had been have received in compensation. Bankman-Fried had received something like $2 billion. Caroline had received $6 million.
Ooh,
and
wow.
the other two top execs, one of them being like the engineer, and I forget what the other one was.
Yeah, the guy that wrote the whole thing.
Yeah, they both received in the hundreds of millions. And it's unclear if she knew how
was the fall guy.
How little she was receiving in comparison or not. But that's just
Wowzers. I mean, she should have
crazy.
had enough responsibility that she saw enough of the books that she would know that, but she very well might not have. You know, like a lot of her interviews reveal that she kind of didn't know everything that was going on that she should have known. You know, like she's apparently just a super smart nerd, obviously, that just, I think, geeked out on the fun of doing this kind of stuff, you know?
I don't think she was having fun. From her diary entries, I felt really weird about reading. I felt really conflicted myself, I would say, about reading it, because it was like, I don't, you know, maybe you just shouldn't look, you know, when that kind of stuff comes out. But in some ways, I think that they really show that she was, not in a good situation, and started to know it. So it looks like we got some comments today, eh?
We did. Let me read a few of these. So Vincent Blocksmith said that mainstream has pretty much evolved into almost exclusively crony capitalism. Is there any fear that the mainstream / cronies will taint the water? Yes, of course there is. Absolutely. We've actually seen this we've been in this for about 10 years now, and the number of people that were in it exclusively for the ethos, especially when it was, 10 years ago, it was in the hundreds of dollars kind of thing, that were in it exclusively for the ethos. And a lot of people just believed this is anonymous money that you can hide from the government and stuff like that. And so it was kind of anti-government, freedom-based kind of ethos. And I don't think that's anti-government as in they wanted to break the law. It's more that these are folks that that see there's a great deal of corruption within government, and see that a whole lot of regulations defeat their own purposes, don't actually work, do in fact harm legitimate actions and stuff like that. And so they just feel like, hey, this is a better way to regulate for good behavior. And it's definitely evolved dramatically since then, as we've had kind of more waves of people coming in.
And some of those early people, some of my favorite people aren't really even in the space anymore. They've moved on to other things. Kind of understandably, right? Point, because as things go more mainstream in some ways, for those of us that like to, be at the beginnings of things, they get less fun. But this can only succeed if it goes mainstream.
Right.
Web3 only happens if it goes mainstream.
I think we just need to recognize that there's an enormous amount of diversity and diversity of opinion in the overall general market. And some of those people are going to be bad actors, and some of those people are going to be motivated exclusively by making money, and some of those people are going to be motivated exclusively by becoming famous. And then some of those people, and in any given market, it's probably the smallest, that are motivated entirely by ethos and by ethics and by, things like that. And so, they're going to get drowned out.
But what we have in our favor is the transparency that blockchain provides us.
Exactly.
That really changes that crony capitalism issue, because that has to happen behind the scenes. That has to happen in the dark.
Well, and we do see it still have a role, the story we just talked about.
Sure.
You know what I mean? That in those areas where we don't have transparency, on those centralized exchanges, you're still going to have psychopaths and crony capitalists come in and try to use their influence. Because part of the story about the SBF thing is he may have had influence because of who his parents were and who they had friendships with and stuff like that. And so that there goes directly to the definition of crony capitalism, that it's not about actual market competition. It's about cronyism, who you know, who you can get favors from, and how you can kind of get around certain rules and stuff like that. So I'd say that's going to continue to happen until and unless we really understand the benefit of DAOs and the benefit of DeFi and DEXs, decentralized exchanges, in that once they can really supplant the use of those centralized
understanding
things, we get that transparency.
The benefit and them working in a way that works for your average user are, I think I would lean more toward the second one there, right? Like, a lot of us understand the benefits and yet don't participate because it's still too hard. So I think that's what will take us over the edge into, quote unquote mainstream in a really positive way.
Yeah.
What's the other?
And then we've got Matthew Miller. Or actually, real quick, Vincent added a little bit of context while we were talking about this. He said, well, mainstream with the noobs / underdogs, as opposed to Apple and BlackRock. Fair Fair, fair. Anyway, Matthew Miller also added, maybe inflation could be reined in by requiring national currencies to satisfy the criteria of stablecoin regulations. Totally agreed. Wouldn't that be nice? I actually have argued for a long time, we've mentioned this at previous episodes, that Bitcoin doesn't need to be a threat to any currency, certainly not the dollar. The dollar, while currently is backed by nothing aside from our full faith and credit, which really just means if you endanger the dollar, we might just send our military after you. And that's a highly violent backing for the dollar. And before we had to back it with such a thing, we backed it with actual commodities, specifically, well, oil implicitly is, but before 1971, gold explicitly was, and so you couldn't manipulate it. And it is really funny. He kind of he points out that we have a higher degree of regulatory rules for stablecoins than we do for the thing that they're stable with, the dollar itself or other kind of fiat currencies, which is pretty funny. And he's right. You know, we would definitely have significantly less inflation if, when you wanted to spend a dollar, you needed to back it with something of real value. New technology. He then also added another comment. New technology usually needs old rules. Interesting. A DAO is supranational. They are in essentially their own society, similar to the Jewish diaspora. Diaspora, thank you. That existed as a nation before modern day Israel was established. That's a good point.
Okay.
And then he added another point here to the first comment. If they're a registered company and the DAO is just a decentralized governance, then the DAO is just a technological alternative to shareholder frameworks. But the DAO is still bound by regulations. Now, he starts that with if they're a registered company, and some DAOs are. This is the way I think some states, and I'm not entirely sure if there's a national level a regulation that requires this. I know, specifically within Wyoming and probably a couple of other jurisdictions, you can actually file an LLC as a DAO, and you need to have a person that is kind of legally responsible for it, but then its decisions can be governed by its kind of DAO governance structure, its voting structure. So that's some great insight behind that. And he's totally right. As long as it's treated that way, I would hope, though, that we're going to get to a point where you don't need to have that individual registered as a company. You can just behave as a DAO.
Because it seems like a lot of risk for the person who's registering the DAO,
definitely.
Because they're kind of the backstop in that way. And to your point about that it's essentially their own society, similar to the Jewish diaspora, it sounds like you might be a fan of Balaji's The Nation State. I don't know. Let us know in the comments. And if you haven't heard of that before, check it out.
Check it out. Yeah. So that's all the news, and we actually got some live chat back here, so that's pretty cool. I'm glad we got that set up. So if you enjoy this throughout the week and you want to be able to interact with us while it's live, please actually join us live. We're going to try to go at the same time every week at noon. So in the meanwhile, you can follow us on the various socials. And you have a fantastic weekend. We will do our best to do so as well. And see you next week.
Thanks so much, guys. Bye.